Freetrade just rolled out changes that could genuinely change the investing market as we know it. On the surface, it looks like they're going to completely blow the competition out of the water. Now, this is most interesting because we've been highly critical of Freetrade in the past, across multiple videos, calling out their high fees and their preferential treatment of certain investors, amongst other things. But for those that don't know, Freetrade was actually bought out by IG last year, and they already rolled out a couple of decent little changes to make them more competitive. The change to make their stocks and shares ISA free was a big one, but now they've rolled out more changes that are genuinely going to have their competitors scrambling. It's important to note that when we're comparing to Trading 212 throughout this video, and we will mention some other leading options as well, we're comparing to them because we believe they are currently the best option on the market. Think about how many platforms are out there that can no longer come close to multiple competitors now, and Freetrade might just be the best of the bunch. I guess we'll find out over the next 10 minutes or so. Today, I want to talk about the changes that Freetrade has made, why they're so important, and how they stack up against Trading 212 across the board. We have to start with the fact that Freetrade recently made their stocks and shares ISA free. This is because it's important to understand how much of an impact small fees can make. Access to Freetrade stocks and shares ISA previously cost $4.99 per month if paying annually, or $5.99 per month if paying monthly. A lot of people think these prices are nothing, but small fixed fees like this are absolute killers for anyone new to investing that's investing anything in the region of £100 a month or £200 a month. And even at £500 a month, you're effectively losing around 1% of your investment to fees alone. Paying 1% in fees in 2026 is absolutely criminal when you consider that accounts charging 0.45% are on the more expensive side when DIY investing. Now, you might be thinking £5, 1%, whatever. But to really emphasise this point, if you start investing with £100 a month and pay £5 a month in monthly fees, you need an annual return of 10% in that first year just to cover the fees alone. That's why it's so important that Freetrade's ISA became free. And we'll talk more about their ISA in a little while, but let's start with one of Freetrade's newest changes that just rolled out. Freetrade's pension, their SIPP, has now also been made free. To access the SIPP previously, you'd have needed to fork out $11.99 per month if paying monthly. At this price, you'd need a 4.8% annual return just to break even on fees in your first year when investing £500 per month as a new investor. Most investors are investing less than that, so they need an even bigger, likely unachievable return. By now offering a SIPP with no account fees and no trading commissions, Freetrade joins a very small number of investment platforms in this category. Trading 212 doesn't offer a SIPP, and despite saying one is coming for a while, it looks like it won't be coming anytime soon. Invest Engine offers a SIPP with no account fees or trading commissions, but they don't offer anything but ETFs. Freetrade has individual shares, and more, which we'll get to. And Prosper has a SIPP, but they don't have a very big range of investments at all. And that is pretty much it for your options that offer a SIPP with a £0 FI fee, which is our unique calculation for working out how much it would cost to passively invest in ETFs. So Freetrade offers more than their close competitors in this area at the same price, £0 in account fees and trading commissions, but the more expensive brokers have always had an edge over a lot of the more modern fintechs in certain areas. They offer mutual funds or more traditional index funds that aren't traded on an exchange. They offer UK government bonds, known as gilts. They have ready-made portfolios, although the fintechs like Trading 212 also have the latter. But Freetrade has now made the decision to make all of this free. Their ISA, their SIPP, access to mutual funds in both of these accounts, access to gilts in both of these accounts, UK Treasury bills as well, access to ready-made portfolios in addition to the ability to build your own portfolios, individual shares, ETFs. They've pretty much got the lot. And I'm not sure any other platform can say this when it comes to the two main account types of an ISA and a pension. Freetrade are also doing what their competitors are doing in terms of trying to win new customers with attractive sign-up bonuses to tempt you into giving them a try. I'll put a link to Freetrade's sign-up offer in the description. I'll also put a QR code on screen. If you sign up via our link or QR code and invest at least £50, you can claim a free share worth up to £100. I'll point out the obvious here. This is an affiliate link, which means we will get a kickback if you use it. You actually do have to use an affiliate link if you want to claim this offer. If you go straight to their site, you won't get it. Terms apply and all investments have risk. They can decrease in value. I also want to point out that we've had an affiliate link with Freetrade for a long time, including when we were publishing multiple videos that were critical of them. Our opinions don't change just because we could earn a few quid. We put people before profits, always. I personally think they're worth giving a try, especially when you can get a bonus for doing so, but I'm not a financial advisor, and nothing we ever say should be taken as financial advice. I'll also link to our offers page below so you can see offers from their competitors. This isn't an advert for Freetrade, and I will be covering some of the weaknesses of the platform shortly because it isn't perfect. But for now, back to Freetrade's changes. Let's simplify the reality of this situation. Freetrade have effectively become Trading 212 in terms of offering the ability to buy fractional shares and ETFs inside a stocks and shares ISA without any account fees or trading commissions, with access to ready-made portfolios if you want them. But then they've massively one-upped Trading 212 by also offering a free SIPP, something Trading 212 has wanted to provide for a long time. For anyone that has been waiting for the Trading 212 SIPP, Freetrade may well be the place to go. And compared to Invest Engine, with Freetrade, you can transfer pensions in from many more places, in addition to buying individual shares, of course. And to top things off, they've fended off many more established brokers, the likes of Hargreaves Lansdown, AJ Bell, Vanguard, etc., by offering free access to mutual funds and gilts as well. Now you can avoid all the high fees in these areas. To further big up Freetrade, just briefly, I think they have one of the easiest apps to use on the market. It's easy to set up recurring orders, and there's less bloat. They don't put a whole load of stuff in there that you don't really need. However, there are some things that aren't free, or don't stack up as well against Trading 212. They haven't been able to beat them or all of their competitors in all areas. They've got to make money somewhere, right? The number one place Freetrade has failed to beat Trading 212 is in their FX fees. These are currency conversion fees that apply when buying shares listed in foreign currencies. Obviously, this doesn't apply if you're investing into UK companies. There are no trading fees here, although stamp duty applies as it would with every other platform. This is mainly relevant for any of you buying US shares. It applies to all other foreign countries too, but it's just a reality that most of you are probably looking to lump in on Nvidia or Tesla or whatever the flavour of the month US company is at the point you're watching. With Trading 212, FX fees are a market-leading 0.15%. No one really comes close to this, but Freetrade especially does not come close. By default, Freetrade's FX fees are 0.99% or 6 times higher. Where Trading 212's FX fees are market-leading, Freetrade's are market-losing. I couldn't think of a better word, but this fee is very high. Now you can lower this rate, but for this you would need one of Freetrade's paid plans. At the standard tier, you can unlock FX fees of 0.59% per month, or at the more expensive Plus tier, you can bring them all the way down to 0.39%, a big discount based on Freetrade's free tier rate, but still more than double that of Trading 212, and still higher than some other competitors as well. So for foreign share investments, if that's your thing, Freetrade probably isn't optimal. If you want to do a lot of buying and selling of US shares, this probably isn't the platform for you. The main other place that Freetrade doesn't compete with Trading 212 and some other competitors as well is in the area of interest on uninvested cash. Freetrade's default interest rate on uninvested cash, which can and likely will change in the future but is correct at the time of recording, is 1% right now and is only paid on up to £1,000 of uninvested cash. Trading 212's rate is 3.8% and has no limits in terms of the amount of cash it's paid on. Freetrade's standard plan allows you to access up to 2.5% interest on up to £2,000 of uninvested cash, and their Plus plan offers 3.5% interest on up to £3,000. Obviously, these plans come with paid memberships, so in this area, Freetrade simply can't compete. However, 2 important points. Firstly, the government are looking to put a stop to cash-like products inside investment accounts to help enforce the new cash ISA restrictions, so who knows if this will even be relevant in future. And secondly, I personally don't care about interest being paid on my uninvested cash. I put the money into an investment account to invest it. However, I understand lots of people are interested in this, so I wanted to cover it for those of you that do care. I know some of you will sell investments and have cash positions for certain periods of time. So those are the 2 major weaknesses of Freetrade. Their FX fees is a genuine weakness. The interest on uninvested cash is a small weakness or potentially even negligible weakness for many people. Overall, I think it's worth asking the question, have Freetrade just become the best investment platform on the UK market? Well, I don't see much point in transferring my Trading 212 stocks and shares ISA at this time, as there would be no real difference in terms of the ETFs I hold, and if I held individual shares, I wouldn't switch from trading 212 either. Again, just because what's the point? They're basically doing the same thing. But for my SIPP, there could well be a big benefit in moving or starting one with Freetrade. Again, using the affiliate link in the description, because why wouldn't you claim a bonus if there's one available? Access to ETFs, shares, mutual funds, gilts, UK treasuries, and ready-made portfolios in a SIPP without any account fees or trading commissions is a market-leading offering, and by some way. If I held investments in other places in an ISA or SIPP with higher fees, again, it might seriously be worth considering the switch. And for anyone new to investing, Freetrade looks like an extremely solid option right now. Let's hope things don't change in future and make me look like a fool. After all, Freetrade were free a number of years ago before rolling out the pricing tiers. Now they're back to being free again, kind of, if you want them to be. When ISA limits reset in April, I'll certainly be giving Freetrade some more of my attention.